Viewers, thanks for tuning into Countdown. A bit delayed. We were talking to Allianz Global Investors, but well, we are here nevertheless. And some bit of good news, if you will, because we are not as low as we were midway through trade. So let's pull up the markets and try and show you what's moving and what's not. It's been a ho-hum kind of a day. We've never even once managed to go above a 0.25% loss kind of a mark. So it stayed below that. And even for the other indices, Nifty Bank is flattish right now, but still in the red. It's not even once has it gone above in the green level as well, Nifty Bank, throughout the trading day today. But the pain in the mid caps and the small caps continues. The last time I checked, both of them were down over 1%. So except for that flash movement that happened in Thursday's session, I don't think we've had positive market breadth any of the last 6 days at least, if not more, except for that one instance. Agam will of course speak a lot more about the liquid universe as well. Let me just throw light on what's happening on the Nifty 50, the heat map, and then a couple of mid-cap charts as well. First, the market breadth has improved a little bit, but a lot of losers. Mahindra & Mahindra at 52-week lows, Dr. Reddy's at the top loser of the day. Indiabulls Housing Finance has stayed low for the better part of the day today. Upstream companies, the likes of ONGC, oil and gas companies like GAIL, etc., have corrected too. Reliance Industries is under pressure, HUL is under pressure, and commodity names like Hindalco, Vedanta, etc. continue to grind lower. So that's the real problem. The only respite for Vedanta is that it's now just about flat. It was down 3.5% at a point of time. What's done well? Some gains for Tata Steel, and yes, there is a preference that the analyst community has for Tata Steel compared to some of the others if the recommendations are to be believed. Some gains for IOC and BPCL and HPCL as well. TCS marginally in the green, HDFC Bank in the green. So HDFC Twins and IT providing that bit of respite to the markets in the session today. Just a quick check of what's happening in the broader end of the spectrum. If we can get the top 10 losers and gainers on the mid-cap and the small-cap indices. This is the mid-cap space. Dilip Buildcon, and we'll speak to the management in just moments from now. The results, the market paying heed to that, 6% higher. Reliance Capital, Balkrishna Industries, 3% higher as well. So not a bad day for that one. Some gains for Avanti Feeds in the session today. What's not done well? Apollo Hospital Enterprises, that whole pledge share issue coming to haunt it. So down about 11%. Graphite India continues to grind lower. Another 10% gone for that one. HEG2 is coming in that wake, down about 5.5%. But Graphite India in particular, ever since the results have come out, has been on a losing spree. Just very quickly, can we pull up small caps once before I hand it over to Agam? Some respite for Shankara Building Products, JK Lakshmi, some gains, persistent, some gains. What's not done well? Jet Airways about another 4% lower, Welspun Corp lower, VIP after the numbers is also looking weak. Suzlon, it's a penny stock, but down as the top loser in the small cap space. But Agam, how about the more liquid universe? Are you seeing pain there, or is it a day which is kind of a bit of recovery?
Well, there's no doubt about the fact that there is a little bit of selling coming through because of the fact that the Nifty is now inched back towards the mark of 10,900. Not at day's lows, but, well, at lows all the same. And we are seeing about 2.5% increase in open interest. And, I think the takeaway at this point is that there is some sort of support at around 10,900 for the Nifty. And we're going to continue to keep an eye on that one. Do remember we have lost out as much as 200 points over the last, couple of sessions from the mark of 11,100. For the Nifty banking futures too, we are seeing some amount of selling pressure coming through with a 5% increase in open interest. So we're keeping an eye on that one as well. And moving on to the India Volatility Index, that is where we've seen a further up move of 1%. However, still stubbornly below 16 despite that 200-point drop that I've been talking about on the Nifty. So it's still below the mark of 16 right now. We are seeing more writing around the 10,900 call. Well, do remember that that is the level at which we are at. So there certainly is some sort of resistance. On the other hand, we're seeing some profit taking around the 10,900 put too. But what does it mean when it comes to, well, your open interest distribution on the whole? Well, again, that's 300-point range. But Apollo Hospitals, as we have been talking about, is certainly under severe pressure with a 53% increase in open interest. We have about a 12% decline here as well at around 1,105 rupees per share. So we're certainly seeing a lot of weakness here. And moving on to the next few bunch of stocks, well, we do also have a traction in Nalco. Now, Nalco is also under pressure, it's down 7%, a lot of selling coming through as we see a 35% increase in open interest towards fresh shorts. Moving on from Nalco, IGL is the other one which is not as weak as the other two stocks that we spoke about, but we certainly have seen another 15% increase in open interest towards shorts as well. And on the gaining end, we have Sun TV. So, well, this one is bucking the trend clearly, up 10%, perhaps reacting to earnings too, I would say. And we're seeing 19% added in open interest towards fresh longs. So, we certainly are seeing some, some gains coming through on that end. But on the whole, it's certainly, we're certainly seeing more losers as compared to gainers today in today's day of trade so far, Neeraj.
Well, let's touch base with a management then, which is gaining. It's good to talk to companies which are doing well. And Dilip Buildcon posts the numbers, trading about 6% higher, volumes too, doing okay for themselves. Let me just quickly recap the numbers. Revenues up 28%, net profit up 25%. Margins stable at about 17.5, so very flat performance on the margins front. But let's get the management to talk about this. Rohan Suryavanshi, Head of Strategy and Planning at Dilip Buildcon, joins us right now on the phone line. Rohan, good having you. Thanks for joining in. Good afternoon to you. Sum up the quarter for us. How was execution? How was the order inflow? And what's the outlook like?
The quarter was fantastic. As you rightly pointed out, execution is going great, and this execution pace should continue, even for the rest of this financial year. And even the next financial year, we're seeing a very, very strong pipeline. And the orders that we already have and, the preparatory work that we've done for all of them will give us a very good, strong visibility of and growth of at least 15 to 20% of top line even next year. So overall, very good quarter, and this pace should now continue till the end of next financial year as well, easily.
Rohan, good afternoon. This is Agam. There's some suggestion that debt is now peaking out for the company. If you could actually, elaborate a little more about how debt may pan out eventually, and also if you're possibly going to see a change in mix with respect to interest rates in the debt as well, how you expect that to come through as well as we move into the next couple of quarters.
Absolutely. So the debt that you said has rightly peaked out. In fact, if you look at our debt equity, it has come down in this quarter, and it will come down below 1 at the end of this financial year. In the next financial year, our debt to equity will be about 0.7 to 0.8. So it is consistently coming down. Now, what one has to bear in mind is that the company has been growing at a 50% CAGR till now. If you look at more than a decade, the company has continuously grown like that. Even this year, we're growing at 20-25%. So the company has kept on reducing its debt equity, and even when it has grown at such pace. Also, at an absolute level, while our debt might have increased in the last 5 years by about 40% or so, our top line in the same time has increased by almost 300% plus. So we have been getting better with how we are using our sources and using more and more of our internal accruals to keep funding the growth that the company has seen. So this should continue even going further. Now, also one more point that I'd like to add here is, even this quarter and actually this financial year, you would have seen a much lower debt number as well. If at all the projects that we had won in the last financial year, all of them had got an appointed date, and if we would have started work on them. Because if the projects had received appointed date, we would have also received mobilization advance. Now, we were supposed to receive about 2,100 crores of mobilization advance from the government, out of which we have only received 230 crores, which means 1,900 crores is still left that the company needs to receive. Even then, we have been doing work on all these projects. We've been growing, we've been investing in equipment, and yet our debt equity has come down. Now, had this 1,900 crores of extra money come into the company, which will come in the in quarter 4 and quarter 1, then you will see a completely different picture of the debt profile and how the debt equity ratio looks.
Okay. Rohan, any update on the delay with respect to appointed dates? What are we working out with respect to timelines on the projects in which there hasn't been an appointment yet?
So all these projects were supposed to come about, the appointed date should have come between September to December. But there has been a quarter delay in all of these projects. So, we are expecting, we have already received out of the 12 HAM projects, we have appointed dates for 4, and we are going to receive 2 more appointed dates in this quarter. The rest 6 that we are going to get is in the first quarter of next financial year. So all the projects, the land acquisition is at a very high stage. We don't foresee any more delays happening, and that is all under control. So it will all come. So we don't foresee any issues going forward.
Okay, Rohan, maybe you briefly mentioned this, but is there a sense of the order inflow improving post-election? I mean, the only concern, and as I said, maybe you already addressed it, but the only concern from this quarter at least seems to be that the order inflow outlook ahead of the election isn't the strongest.
You're absolutely right. I think overall broader market is concerned about that. But let me actually give you some numbers and data points to sort of say, how we are viewing the situation. As of right now, as of today, the government of India has floated about 1,15,000 crores of orders already in the market, road orders. Now, these orders, since they've already been, the tender is already out, they've been floated out. We have to see how many tenders will be awarded before code of conduct is sort of announced. Now, let's assume whatever projects are not, we are not able to sort of get bidding for, and if the tenders are not finally opened. Post-election also, all this inventory of projects that have already been floated out will still be there for whatever government comes in. So this gives a very good visibility. 1 lakh crore plus of visibility is already there. And bear in mind that all construction companies right now have more than a 2.5 year, forward-looking order book with them. Like right now, our order book at the end of December quarter was 23,000 crores, which gives us a 2.5 year visibility forward. So even if we were to not... Sorry.
Ron, sorry. No, just one small follow-up to that, and this will be my last question. But the only question that I have to that is that, yes, I agree the order is in your kitty, and whatever the appointed date, etc. comes about, it is going to come to you. But if there is a delay in this process, does it impact the revenue run rate for quarter 4 and quarter 1 of FY20? Quarter 4 for FY19 and quarter 1 of FY20?
I don't foresee any more delay happening in the projects, because all the projects, we have about 65 to 75% land already available, and 80% land the government gives the project. So the projects are at very high stage. It's not like any of our projects have only 10% land or very little distinct portion. So every project is already at a very high stage of land acquisition. The final stages and the final things are happening. So we are very confident that the projects will get their appointed date in the time that I've indicated. And the revenues that we've indicated for even the next financial year will happen. Like even if you look at it, all the orders that we had won in the last financial year in March, very few of them started, but our revenue growth has still been about 20-25%.
Okay, Rohan, we'll leave it at that. Thank you for joining us and taking us through what we can expect for the quarters to come as well, and of course the quarter gone by. That's the management of Dilip Buildcon, and of course the stock's doing well on the back of steady earnings coming through, and a lot of assurances also coming from the management. It's currently up as much as 6%. But let's move in and take a look at the markets. Not too much to speak for. Nifty still holding on to 10,900. And on that note, I'm going to get in our technical experts of the day. We have Hemen Kapadia of KRChoksey joining us here in the studio. And we also have Sumeet Bagadia of Choice Broking joining us remotely. Thanks to both of you for joining in. Hemen, as usual, let me start off with you. How are you seeing trade to pan out now?
Well, 13 weeks of pottering around, a breakout, which flops, and we are back to square one. Things don't change, but Bank Nifty is still sort of in suspended animation. Mid-cap, small caps are getting butchered every day. Either the market breadth improves or the main lines come down. So frankly speaking, I'll do the same thing which I have been doing for the last multiple weeks. I'll sell a short strangle, 11.2, 10.5. I don't think, we went close to 11, we went past 11.1, we've come back again. So I don't think anything spectacular looks like happening. We've also been riding on a world market move. I think France, Germany 10%, US 15%, FTSE, Britain was 8-10%. So I think it's been a world market bounce. So we are sort of riding piggyback. I'm not bearish, but I'll do the same thing. Sell the 11,200 call and 10,500 put.
And Hemen, at what point in time would you want to move out of this triangle if you think things are going wrong or taking a big direction on either side?
See, 11,110 is the resistance level. We came to 11,118 that last week. So if it closes above there, I'd probably square off the calls, add more puts, or hedge it by going long in futures, but rather than make it so convoluted, I just square off one side and write the other side and probably add more puts.
Okay, all right, fair enough. That's a very valid strategy going in. But Sumeet, good afternoon to you as well. What is your view on the benchmarks now? Are you also expecting consolidation in the near term?
Hi, good afternoon. Well, as far as benchmark indexes are concerned, there is a possibility that some correction can be seen from present levels, but the overall bias is positive. If we take a time horizon of 1 month or 2 months, then any dip from present levels in Nifty and Bank Nifty should be used as buying opportunity. A correction till 10,800 or 10,750 levels in Nifty should be used as buying opportunity. On the higher side, 11,000 will act as a resistance. And once the Nifty is able to break 11,000 levels on closing basis, then we will see a move till 11,300 levels in next couple of weeks. At the same time, Bank Nifty also looks good to me. Because of volatility, if there is a correction till 27,000 or 27,100 levels, then that should be used as a buying opportunity. Downside, Bank Nifty has supported around 27,000 levels, and on high side, the immediate resistance for the index is placed at around 27,300 or 27,500 levels. Once these two levels are taken away, we will see a very good move till 28,000 or 28,500 levels in next 1 or 2 months time horizon. We feel any correction in Nifty and Bank Nifty from present levels should be used as buying opportunity.
Sumeet, then why don't you tell us about stocks that you're betting on today's day of trade?
Sure. I have two stocks for the day. One is on buy side and the other one is on sell side. A buy side stock is from banking space, and that is a Kotak Bank. Kotak Bank looks good to me. Stock has given a good move in last 5 days. Now a closing above 1310 will take stock prices to 1350. That would be the immediate target. And the second target for the stock is placed at around 1380 levels. So one can initiate long positions with a stop loss to be placed at 1270 on lower side for the upside target of 1350 and 1380 levels. The second stock for the day is India Bull Housing Finance. This stock is looking weak on charts. The stock has given a correction in last couple of weeks. Looking at the chart, it seems that some more correction can be seen from present levels. I think those who have taken sell positions, they can hold on their existing positions with the stop loss to be placed at 630 levels on higher side. Immediate support for the stock is placed at around 575 levels. Once the stock is able to break the support on closing basis, then we will see a fall till 550 or 540 levels. So it's better to be on sell side in India Bull Housing Finance.
Okay, and Hemen, how about you? The same question to you.
Yeah, I have a buy call on Godrej Consumer Products at 688, stop loss 682, target 704. Oversold, positive divergences, crossover buys, upward key reversal coming in. There's more of a intraday position. I had a buy call on Tata Steel, but thing is Tata Steel has already moved quite a bit by the time I gave the call. The target was, it was recommended 474, target 490. We've come to 486. So I am not sure if that makes sense as a buy now. I'd probably go in for HDFC at 1945, stop loss 1930, target 1970.
Okay. I think we'll just be getting Sunita Reddy of Apollo Hospitals in moments from now. Just while we wait for that, T.S. Harrier of HRBV Client Solutions with us. Hari, quick thoughts. I think we'll just getting the management in moments from now. This pledge share issue which has brought the stock down. Your thoughts on Apollo in particular?
See, my understanding is the pledging is not as high as a lot of other stocks. I think it's much lower in percentage terms. See, one thing is, let's understand, this has been a company that has had a very pedigreed management. We have known this company for about 25 years, and I think they've been a pedigreed management. Nothing much to worry about. We need to know the details, but I would believe that this is a very, very temporary problem.
So would you consider this as good news for somebody who wants to invest into Apollo?
I would believe yes.
You would be a buyer here?
Yes, absolutely.
You would be a buyer in Apollo Hospitals. You believe fundamentally that Apollo is a good company to invest into anyway.
It's sound, and I think corporate governance has never been an issue with Apollo in the past.
Okay, well, let's get in. Sunita Reddy, MD of Apollo Hospitals, on the line. She's joining us on the show. Ms. Reddy, good having you. Thanks so much for joining in. Is this the extent of the sale that would have happened in the first place? Because the pledges have gone up 74.81. Have any of these stocks gotten liquidated?
No, nothing has got liquidated. The increase in the pledge has happened because of an unwinding of a transaction that happened 5 years ago. So it was just unwinding of that transaction in which we had to give an additional 5% pledge. But having said that, there are two things to note. One is that there is about 11% excess shares in the hands of the lenders. So there will never be a reason for people to really sell our shares because there is a margin of safety. And the second, we are planning a liquidity event that will help us to bring down our pledges by 50%.
So, Ms. Reddy, because the stock prices would have gone down, some of the places wherein you would have pledged the shares would have asked for additional collateral. Am I to presume that the promoters have adequate liquidity to provide for that collateral?
Yes, we do.
Okay, and have there been demands for that, and have you had to do that act as well?
No, we have not. We have not. I think we still have a lot of room.
Okay, you still have a lot of room. Okay, just wondering, I know briefly mentioned that this is a KKR instrument. Why was this pledge created, and the extent of damage as a result of this KKR instrument that you spoke about, is it done and over with?
Yes, now it's done and over with, yes.
Okay.
Now we should just look at an uptick in the stock because the performance as well has been very good.
Yeah, Ms. Reddy, I hope you appreciate my questions. The reason is these days pledge shares issues tend to spook the markets in a big way. So any kind of clarification and all kind of clarification from your end would be helpful, which is why all of these questioning. I believe in one of your answers to me, you also mentioned that you have assets which you would liquidate to bring down the pledge. Would you look to do these within a particular timeline, Ms. Reddy?
Yes, within the next 6 months. I think it's within our own interest to liquidate these so that we can bring down our pledge. We are focused on Apollo Hospitals and our ownership is key.
Okay. And my last question really on this, because you've answered almost everything, would you look to bring the pledge down up to a particular level where you would be comfortable with, or are you comfortable with even this 74% level?
No, we are not comfortable at the 74% level. We have already started working to bring it down to a 50% level in the next 6 months.
Okay. We'll leave it at that, Ms. Reddy. All the best for that. Thanks so much for taking the time out.
Thank you.
That's 11% for Apollo even now. The management, Hari, clarifying that it was on account of a deal, unwinding of a KKR instrument, a back-ended structure, which the company had to close out in January. That damage is done. Yeah. And there's still adequate room for them to provide for collateral, even if they have to, and they are adequately funded for that. You would want to trust the management when they are saying that. Is the damage done?
I would believe so, because see, let's not forget that unlike an ARCOM or an ARPOR where there are question marks over the fundamental business model, I don't think in case of Apollo there is a question mark with the fundamental business model.
There weren't any for Z as well.
No, Z there
aren't. Well, the fundamental business model of Z, no. The allied business is yes.
Yeah, allied business. So I don't think Apollo has those kind of problems of group companies having your borrowings under a group NBFC and not showing the parent company. I don't think those kind of problems are there as far as, and the only finance company that they had, they already sold it to Birla, so I don't think that exists any longer. Now, I think the one issue here is that after what happened in case of ARCOM, I think a lot of promoters, including I think what Sunita was mentioning, is that they're getting a little jittery about their pledge shares. Now, it was not a problem probably 6 months back or 8 months back, but today I think even if somebody has got 70% pledge, which is quite normal, it's not like a 95% like a JP or a ARCOM. Even at 70%, people are getting a little jittery and trying to bring it down. So I would believe that whatever she's talking about, what they're trying is absolutely legitimate, especially considering the kind of a panic that has been built around pledge shares at this point of time.
Hari, stay on.
Okay.
Motherson Sumi, I guess.
Yeah, absolutely. Well, we did have Motherson Sumi's earnings coming through, and the consolidated revenues jumped as much as 14.5% compared to last year, while margins were relatively flat. Yatin Mota caught up with Vivek Sehgal, the chairman of the company, and began by asking him about the demand scenario for the domestic business. Listening.
What's important is that we have an overall strategy for the group, which is 3CX15, which means no country, no car maker, no component more than 15% of our revenues. Now, the advantage of that is clearly illustrated by what you just asked me. Because if India was the only country that we were working in, the customer was only in India, definitely we would have had a very poorer result. Okay. So I think the overall strategy of the group, one country can have issues, why it goes up, goes down. We really can't control that. Okay. But what we try and do is make sure that we don't second guess our customers, and whatever exactly they want is what we supply to them. So overall in the world, some countries are going up, some segment is going up, some section is going up. So that kind of takes care and offsets whichever company or a country or something like that which has underperformed. So I think the management of Motherson is vindicated that it's a correct way to de-risk ourselves by going by the 3CX15 manner.
Okay. And sir, also I would like to congratulate you on the starting of commercial operations for your Tuscaloosa plant in US, and more importantly you have your US plants on board, the Mexican plants on board, and if I remember correctly, you know, in a conference call to analysts you said that all of these new plants will contribute to nearly $1 billion in terms of revenues. So you know, in terms of the overall you know, growth trajectory as we move into the new financial year, you know, couple of months ahead, do you think these plants will be the substantial growth drivers for your company?
Yes, absolutely. I think the 3 plants in SMP and multiple other plants that we have set up. In fact, we're probably very grateful to our teams, and think about it, you know, in the last 4 years we have set up 33 new greenfield plants. So that kind of gives you an idea as to how we prepared ourselves for this huge jump from 5.5 to about 13-14 billion just on the organic side. So I think it's important for us to understand that greenfields are necessary because we have a huge order book of 19.2 odd billion euros, and we think that that particular capex is kind of over now. So definitely all the benefits will come in the last year, which is 2019-20, and the final year of our 5-year plan. So yes, I would say second quarter, third quarter, you will really start to see the benefits of what Motherson has done and what our teams have achieved. Okay. Really phenomenal.
Okay. Further to your answer, Mr. Sehgal, you said that there is no capex, you know, moving ahead, you know, in terms of a major capex. Plus, your cash position is also healthy. And if I look at your numbers, your presentation does say that you have reduced your debt as well. So from here on, can investors expect, you know, lesser, you know, money outgo on capex and probably higher debt reduction?
Yeah, I think you will probably see just maintenance capexes. Okay. And also this is the final year of our 5-year plan. So definitely everybody will be focusing on ROCE in a big way. In fact, we have ROCE kind of momentum in the group, in every plant, in every unit, in every company. So definitely they will do everything to improve the ROCE and come as close to 40% as possible for the group. So yes, you can expect that we are going to be very, very cautious about what we are spending our money on. Okay. But again, if I get a huge order, if I have to take over a company or something, that I can't really say anything, because if the customer tells us to take over a company and we go and do a big capex for that, well, that's very clear in front. But for all our orders and our running businesses, we don't anticipate any capex of a big cycle, other than maintenance capexes.
And sir, this time you have not given a breakup of startup costs. So since all the plants are online, shall we do away with all the startup costs now and include it in the mainstream costs?
Yeah, there will be no more startup costs because there is no new plant coming. Whatever is coming is a very small amount, really. So no point. But whatever our startup costs were, they were always passing through our profit and loss account. So we were only giving it to you because just to as a reference that this could be the startup cost. But now we have just a ramp-up cost, which is a part of normal business. We don't have to show it separately.
Okay, that helps. And so one final question: your recent acquisitions, how have they fared? Especially, the ones like Redel, and on the margin performance also, it has been satisfactory for PKC and SMR. So if you could, give us a trajectory as to what kind of performance do you expect from all of these newer acquisitions, and do you expect the margin improvement in coming quarters for all of them?
Absolutely. We don't guide you on margins. Our focus is on ROCE. And when we come out with our fourth quarter results, you can see the balance sheets you will see that all of these companies have provided very, very strong support to our ROS effort, and which also translates to whichever way you want to look at the company. So, I confirm that all major capexes are over. Almost all our plants are now already starting to build, so there are no startup costs anywhere over there, and it's normal business now.
Well, that's the management of Motherson Sumi telling us about the acquisitions, the latest acquisitions, and what we can expect with respect to return on capital employed. That's the target. But the other target is, of course, as the management has suggested, the $18 billion in annual revenues, which does seem a bit distant at this point in time, considering that target is for about FY20. Mr. Harrier, we've had this conversation a bunch of times before on Motherson Sumi. They go ahead, they make acquisitions, but it's always that because of their acquisitions, their capital expenditure, perhaps to a certain extent, also impacts their return ratios. Yeah. And that's the reason why I want to ask you, firstly, do you think that the top line target is possible? And secondly, in that case, if their top line target does become possible, what sort of impact can it have on their return potential?
See, I think 2020 is going to be tough for a couple of reasons. Number one, I think we just have about 1 year away. Yeah. And number two, I think globally there is a stress because of a fall in Chinese demand. And if you look at the latest EU projections, I think all the EU nations' growth is being downgraded by about 40 to 50 basis points. So I think my view is any company, any auto company is looking to expand sales in a big way is not going to happen at least in the next 1 year. So I would believe that 2020 to me looks to be very, very optimistic. But one thing I would also like to add is that I have been observing this company for the last 15 years. And I think quarter after quarter, they've delivered their long-term projections. It is 5-year projections. I wouldn't say they've delivered on a 1-year projection, but a 5-year projection that they've delivered. So to that extent, I would believe them. And also, let's not forget that the stock used to be about 260 or 270. It's down to about 130. So about 50% of the stock is down. So I do see a relative margin of safety in the stock at these prices. But yes, coming to a core question, 2020 looks to be difficult. Not because I have doubts about the company's capacity, but more because the market is going to be very, very strained in the next 1 year.
So would you buy Motherson Sumi right now?
I wouldn't be too keen to buy any of the auto-related stocks at this point of time. Till there is clarity that there's going to be a revival as far as auto demand. That is not visible at this point of time.
Okay, well, it's not visible. But Hemen, if I can actually also take a technical check here with Motherson Sumi with you.
But I'd also agree with exactly what he said. I think I've been bearish on the auto sector for some time, and I continue to do so. Coming back to Motherson Sumi, lower tops, lower bottoms, we are in a short, medium, long-term downtrend on all time frames, Agam. So, yeah, mild oversold, but that doesn't change anything. It still looks weak. Any bounce will be sold into. Further downside seems like a distinct possibility.
Okay, well, with that, let's move on and take a look at.
No, Agam, I was just looking at the two. I thought you were taking a break. I just thought I'll want to have a view on two large cap names today, which have fallen. And we'll talk about Dr. Reddy's at length, I'm sure. But Mahindra and Mahindra, Agam, 5% lower, 647 trading at fresh 52-week lows. I don't think, I mean, there were rumors of they scaling down the tractor guidance. I didn't see anything to that effect. Escorts maybe did that. I didn't think M&M did that. There's serious pressure here.
Absolutely.
And despite Tech Mahindra's performance too, doing reasonably okay. I'm just saying because it's a holding company of sorts, etc. and all of that, and all of that counts too. But under serious pressure today.
Yeah, and of course the other stock that I was also going to talk about and address right now is Sun TV Network, because we've certainly seen a surprising up move here. Or of course, possibly because of earnings, but the real question is their earnings have always been so volatile. And, one quarter is good, the other quarter is bad. At this point in time, in comparison to Sun TV, the other broadcasters are not doing well at all. So if you pull up something like a TV18, or for that matter, TV Today network, which is actually declining, has been on a constant decline over the previous, I would say, through a few weeks. So that's TV Today. It's moved from levels of 400 to now 316 odd levels. Of course, we've seen pressure in Z Group stocks, but that's entirely for a different reason. Ms. Harrier, if you can come in on the entire broadcasting network and perhaps your word on Sun TV as well. How does that stand right now? Is this just a one-off quarter, or do you think there's something more to the story?
say a couple of things. I think we've been talking about this even the last time we met, and I was mentioning about Sun TV being a kind of a relatively better pick compared to Z, because I have had my own doubts on Z for a long time, because I always believe that there's a company that tried to be something for everybody, ended up being nothing to anybody. So I think that is a problem I've always seen with Z and always felt with Z. So Z for me is anyway a strict no. See, as far as Sun is concerned, the sharp rally today, in my understanding, what I'm given to understand when I spoke to some channel checks, was that yesterday apparently when Mr. Modi was there in Tamil Nadu, he did not speak anything against the DMK. So that I think opens up the casket that probably there could be some post-election. You don't know all these things. But I wouldn't read too much into today's rally. But having said that, let's not forget that Sun TV actually corrected up to 50% from the peak. So I think even at these levels, to me, that stock looks to be fairly reasonable price. I don't see much of a worry on the stock. But yes, if you were to ask me to select a stock in the media space, without a doubt, it would be Sun TV.
Okay.
What about the other one? What about Mahindra and Mahindra?
Mahindra, frankly, I've been observing the numbers here. I'm surprised at the way the stock has been going down, because not only I looked at the quarterly numbers, I also looked at all the research reports that came out, and almost everyone seems to have a target of 850 to 900 in the stock. So even, frankly, to me, I think even this comes as a surprise. Other than the fact that I think Escorts is downgraded tractor numbers, I don't see any big reason for Mahindra to really go down.
All right. Let's put up Kotak Mahindra Bank as well. And the reason why it's not doing spectacularly well today, but we just had a lot of analysts talk about this one in today's job trade. It's up around 0.5%. That's actually not too much to speak for, but it is holding above the mark of 1305. Sumeet, come in on Kotak Mahindra Bank. How is this? I think we've lost Sumeet, so we'll have to come back on that one. And in the meantime, if I can take your view, Hemen, on Kotak Mahindra Bank, where do you stand here when it comes to the stock?
One of the brighter sparks, Agam. Maybe the overhang of whatever is happening is preventing a major upside, Agam, but technically we're sound. We've just about posted a fresh 2-month high. Fresh buy, I'm not sure, but it remains more positive than negative. And even the correction, I mean, we should have been sub 1,000. It's not done that, keeping in mind the quantum of the rise, but a lot of relative strength. It looks amongst the better private sector banks.
Okay. Well, so do watch out for those names in the session today. And last but not the least, of course, Dr. Reddy's lab, which is really under pressure, 5.5% lower in the session today. We'll watch out for all of these. Hari, take a moment to thank you for joining in today and giving us thoughts. Really appreciate your time.
Thank you.
That's the view from TS. Harihar, we hit that break. On note that the Nifty's again succumbed to a little bit of selling pressure, down currently 0.5% lower. On the other side of the break, we take a look at the Fab 4 stocks of the day. 3:15, we get you a sense of what dealings are recommending, and then some closing strategies. Stay tuned to Bloomberg Quint Live.
Indian Overseas Bank, the commitment, the recognition, the passion, the trust and excellency since 1937. Indian Overseas Bank celebrating 82nd Foundation Day. Good people to grow with.
RP Sanjeev Goenka Group, growing legacies.
Today we are meeting Royston Abel, theatre director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated, not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Charmers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. This is Countdown. We just have Eicher Motors earnings coming through at this point in time, where it looks like a steady set of numbers based on the kind of, well, at least top line and bottom line numbers we're seeing. So we do have the revenues, which are about 3.5% higher than street expectations, with well, your revenues coming in at around, okay, so your net income is around 501 crores. That's your profit at higher, slightly higher, by as much as 533 crores. And moving on to well, your other factors which are in play, as you can see, your revenues are also just a tad higher than street expectations. On the whole, if you consider your revenues at 23,400 crores, slightly higher than 22,600 crores is the kind of number we are working with. Let's get in Aditya Bapat, a research analyst of IIFL Securities, who's joining us at this point in time. Aditya, your initial take, what do you make of the Eicher Motors numbers, above, below your expectations?
Yeah, well, I would say that these numbers are marginally better than what we had expected. Yeah, though there is one thing that the EBITDA margin has stepped below the 30% mark, but I would say that this was more or less in expectation, with what we had thought of. And one thing which is actually good is that the realization growth has been pretty strong. So, it has come in at a little more than 10% as per my initial calculations. And we were expecting it to be a little less than 9%, the realization growth. So all in all, I would say that these are a pretty okay set of numbers. So there's nothing to panic per se.
This margin disappointment, 29%, sub 30, yes, and almost 200 basis points lower. You think it's a new normal, or would you reckon that it could bounce back?
No, I certainly do not think that this is a new normal. This is more based on whatever the headwinds the industry is facing currently. So, and if you go to see the trend, then yes, we had 30 to 35%, 32% EBITDA margins over the past many quarters. But this is just, I would say, a 1 or 2 quarter phenomenon, and the margins should bounce back.
What would you look out for, Aditya, in the management commentary? What would be the single most factor according to you, based on the numbers that you've seen thus far?
Yeah, well, I would first of all look at, what is the directionally, where is the demand headed? That is firstly what I would want the management to specify. And, secondly, what is it that they are seeing with respect to the margins? So these are the two most important factors, in my opinion.
Okay, well, let's also get in Naveen Kumar Dubey of Narnolia Financial Advisors, who joins us on the show right now. Naveen, good afternoon. What have you made of the numbers? Any concerns with respect to margins?
Yeah, margins were certainly below our expectation. We were expecting somewhere around 30.6% of margins during the quarter, but it has come down to 29%, which is really a concern we see here. Going ahead, we expect that the margins will achieve those 30% marks because in this quarter there was certainly the new launches that happened from the Eicher side that certainly had some impact on the other expenses, which resulted in the lower margins during the quarter. Further, I think on the other income has resulted in a good PAT for the quarter. So I think the bottom line has come up with our expectation of somewhere 516 crore.
Okay, Naveen, on the consolidated basis, sure, if you leave the Royal Enfield business aside, What can you expect from its joint venture with Volvo, and what is your outlook going forward?
So certainly the commercial vehicle side right now is a bit under pressure due to some liquidity issue that is in the market. But this can, Eicher can overcome from this if we see the new launches coming in going ahead, which will add. And second part is that if we see the construction side, which is related to the higher volumes for commercial vehicles, that their order book is very strong with the construction structure companies. So we expect going ahead the volumes will be certainly on the higher side, but not in the next 2 quarters. After then, we expect that volumes to be higher.
Okay, Aditya and Naveen, thanks for joining us and giving us your initial take on Eicher Motors numbers. But on that note, I'm also going to bring in my colleague Yatin Mota, to give us a fine print of the numbers. Yatin, this is over to you.
Agam, if you look at the numbers broadly, they were in line with the street expectations. Remember the fact that this time we had the Royal Enfield volumes which declined on a year-on-year basis by 5-6%, and that was the reason why we could see some pressure in the standalone business this time. The margins came in at 29.5%, largely again in line with the street expectations. And if you look at the consolidated earnings also, the revenues were up 3% to come in at 2,341 crores. Profits came in at 533 crores versus the Bloomberg poll of close to 500 crores. And if you look at the EBITDA, it came in bang in line with the street expectations at 680 crores. That was down by nearly 4%. Profit, however, was boosted because of higher other income, which was high around 140 crores for the consolidated entity, and margins for the consolidated entity again came at 29% versus a level of 31.2. In a scenario wherein we have volumes falling, obviously there will be pressure on margins. Remember, Hero MotoCorp or Maruti, most of these auto companies, including M&M, which came out last week, had margin pressures. So it was quite evident that this time again companies like Eicher Motors would be feeling the pinch of higher raw material costs and lower volumes, and exactly that has happened. So no surprises on the negative side. The numbers are broadly in line with the street expectations.
Okay, Yatin, thanks for joining us and giving us that fine print of Eicher Motors earnings, which currently is trending marginally in the red at this point in time. It's given up some of the gains that it had made through the course of the day, but on the whole, not too much to speak for when it comes to the movements. But on that note, let's move in and talk about the Fab 4 stocks of the day and see what has made Yash Upadhyay's list today. Yash, good afternoon.
Good afternoon, Agam. I'll start with Sun TV, which came out with an extremely good set of numbers, and brokerages are positive on the stock as well. It's up close to 10% in today's day of trade, with most of the analysts having a positive outlook. Axis Mutual Fund being one of it. They have a buy rating and a target price of 750 rupees, indicating a potential upside of more than 40% from the current market price. Make Money Organics is another name to watch out for. Like most of the specialty chemical manufacturers, this one too came out with good set of numbers, and the stock is up about 16%. The revenues have grown by 23% on a year-on-year basis. EBITDA is up 24%. Net profit is up 52%, and margins have grown by almost 220 basis points on a year-on-year basis. So all in all, extremely good set of numbers when it comes to Make Money Organics. Tata Steel is up 2.5%. The management commentary was positive. They maintained their FY19 guidance, along with mentioning about the fact that they are on track in terms of their deleveraging efforts as well. And the last stock I want to highlight is Container Corp, which is up 2.5% in today's day of trade on the back of high open interest build-up of more than 8%. So fresh longs seen when it comes to Container Corp.
Thanks a lot for that, Yash. So do watch out for those names. Before we get in, Dharmesh, Kant, just a quick word on what's happening across the broader end of the spectrum. A lot of stocks are now cracking big time. BF Utilities, I believe, in the last few minutes of trade has just had a serious drop. If you can pull up the intraday of that one, look at that sharp crack in BF Utilities, 154 and counting. This one is trading at fresh 52-week lows, I would reckon. Nalco continues to reel under pressure, now down 9%. And VIP Industries 7% too. Sumeet Bagadia, just a quick thought. It's a fairly well-traded counter, BF Utilities. What do the charts indicate here?
See, BF Utility has given a breakdown. Stock is looking weak. There is a possibility that we might see a correction from present levels too. It's better to avoid long positions, and downside there is a possibility that we might see a move till 120, 125 levels.
Wow. Well, watch out for that one. The 52-week chart will show it's been a rank underperformer, but yeah, that would be true for a lot of other mid-cap companies as well, so this is not an exception. But look at that, 67% wealth eroded in the last 52 weeks. Hemen, the other one which is trading, I think we should pull up the 52-week chart of ONGC as well. While we're talking about oil and gas looking reasonably okay, ONGC's had some serious pressure points. Look at that, it's trading near around the 52-week lows. Is there more downside?
I think so, Neeraj. Frankly speaking, it's as dead as a dodo. We were moving in a range between 213 and 195, Neeraj, for almost a year. Sorry, more than a year. We gave a downward breakout from there. Now the range has shifted from 155 to 213 to 155 to 135. Now it's on the verge of testing 135. If that breaks, we are going to 125. Anyway, we are at 3-year lows. Slight oversold situation, but the weekly chart seemed to suggest a limited downside, but it's going nowhere, frankly speaking, Neeraj.
Okay. Well, let's get in Dharmesh Kant of IndiaNivesh Securities, who now joins us on the show. Dharmesh, good afternoon. Thanks for taking the time out. Let's talk about perhaps the auto ancillary sector now. As things stand, well, most of the earnings are already out. And while we are expecting a little bit of a slowdown in the automotive space, what correlation do you think it can have when it comes to the auto ancillary sector in India?
Yeah, good afternoon. See, most of the auto ancillary companies which are big names in India are also exporters of auto components to outside world. So right now what we are witnessing is a global economy getting slowing down, and this is the impact has been felt on all the auto ancillary companies. At the same time, commodity prices after the correction which has happened have stabilized, and there are few spike ups out there. So input costs have gone up, and what was noticeable was that in spite of input prices rising, they were unable to get the realizations up. So there is no meaningful dent out there. Currency somewhat played in their favor, but I don't think going into the Q4, the currency again, there won't be any advantage of currency depreciation happening out there. Net to Sumeet, they were already expensive. All auto ancillary companies, nothing was available cheap. Everybody was trading at the premium end of their valuation, and the type of market we are in, the type of selling pressure we are seeing across the board, I don't think at current price multiples or the valuation multiples there will be any serious buying happening in any of them. So it will be more of a sell on rise kind of a scenario, and we are not recommending any auto ancillary company to our investors as of now.
Okay, we also have SpiceJet's earnings coming through. So while we have seen steady growth in its top line, we're also looking at a significant deterioration in its bottom line, which is why you've seen that sudden spike, of course, which is represent perhaps if on account of the 16% growth in revenues that you have seen year on year. But we also know that there has been a lot of volatility in crude, which should in turn have some sort of implications on margins as well. We're still waiting for the margins number, but at this point in time, we can tell you that your net profit has certainly declined by nearly 78% to just about 55 odd crores, and that's possibly could be one of the reasons why we could see a further dent in your earnings per share. Of course, we'll continue to get you more updates with respect to SpiceJet. But moving on, let's actually take this entire sector up with. All right. Okay. We'll do a stock check on this one, and I'll actually take this up with Sumeet. Sumeet, SpiceJet, if you have that on your list, how are you looking at traction here, and what would you do with SpiceJet at this point in time?
Well, the stock can give a good move from present levels. Stock is looking good. It has taken support at lower Bollinger Band, and that is at 75-76 levels. Till the time these levels are not taken away, it's better to be on buy side. From here on, the stock is resistance at around 83 or 84 levels. Once the levels are taken away, we can see a move till 92 levels. So it's better to be on buy side. One can initiate long positions at the current market price with a stop loss to be placed at 78 levels on lower side.
Okay, Dharmesh, fundamentally, SpiceJet, the stock is shooting up, the net profit fall notwithstanding.
I don't know why it's shooting up because it should be shooting down. It should be landing rather than taking off. The numbers, as you say, I mean 2400 crores kind of a top line was there, and you are delivering a PAT of only 55 crores. So last on a comparable basis, 240 odd crores was the last thing they reported. So a sharp fall in the numbers, and this is what shows the sensitivity and volatility. In spite of a volume going up, you have a trouble maintaining your margins. And if you can't maintain your margins, the sensitivity is really very high, no matter how much volume of take you cater to. So I have been, perennial bearish on this aviation sector, and 1-2 kind of trading bets can always pay out. But look at Jet Airways, where they are, the type of news flows which are coming out every day. Even Indigo is now having a problem with their operations. So this does not mean that SpiceJet will benefit from what is happening with the other airlines, and the capacity constraint will kick in since the more and more presence of jet is grounded. I do believe that this sector itself is very sensitive to crude oil volatility, and if again the crude oil prices spikes up by say $10 from the current levels, they would all be reporting losses. So at best you can play a trading bet, but not an investment buy at all to my mind.
Okay, well, it's well past 3:15 now, so it's time to take a look at what dealing rooms are recommending to their clients. Let's start off with Yatin Mota as usual, who's giving us channel checks. Yatin.
Afternoon, Agam, and if you look at the dealing rooms, of course, most of the trades are on the short side. So starting with Axis Bank, and dealers are of the view that based on technical trends, this is one stock wherein a STBT kind of a strategy can be used, which is sell today, buy tomorrow. So from the trading side, dealers do expect some more downside as far as Axis Bank is concerned. United Breweries, that stock has been flat, was up throughout the day, but dealers do believe that at lower levels, domestic funds are buyers in the counter, and probably there could be some uptrend coming soon as far as United Breweries is concerned. And finally, in the cash segment, do watch out for Sun Pharma Advance, which is Spark. A lot of HNIs are lapping up shares in trade today. Good volumes, 11 lakh shares already traded on the stock exchanges, but Darshan has a few more stocks to talk about.
Yeah, so I think one of the stocks which managed to do well today, it opened strong, managed to correct, and then again has started going up, is Tata Steel. Strong numbers, strong commentary from the management, a lot of deleveraging, and seems to be the preferred bet as of now. So the dealers believe that the momentum probably will continue. If the market manages to stabilize, Tata Steel probably will outperform. And if you see for long, I think that over the past 2 months or 3 months, the traction has shifted from JSW Steel to Tata Steel becoming the preferred stock in the steel space. So Tata Steel is the first one. Again, Kaveri Seeds, again, there is a lot of selling. Some of the HNIs are taking active short positions. The counter has corrected significantly. They believe that the traction could continue on the downside, so they are watching out for Kaveri Seeds. And the final stock that dealers are talking about include Balkrishna Industries. A huge amount of short covering. Even the numbers were below estimates. I think the guidance was maintained, which means that the fourth quarter probably will be much stronger than what it was in the third quarter. So short covering seen, and the counter up almost 6% in today's trade.
Okay, Darshan, thanks for joining us and getting us the dealing room check at this point in time. But it is almost 3:20, so I'm going to take in closing strategies from our technical experts. Hemen, coming back to you, your closing thoughts.
I have a BTST on V-Guard. We are at 193. Stop loss, excuse me, stop loss over 91, target 197, BTST.
Okay, BTST on V-Guard. Sumeet, what about you? Your ideas?
Well, I think at present Cipla is looking good to me. Cipla has given a good move in last couple of days, and looking at the chart, it seems that the same move will continue, and from here on, once the stock is able to break the resistance levels of 545, 546, we can see a move till 560 or 570 levels. So one can initiate long positions in Cipla at the current market price, with a stop loss to be placed at 532 levels on lower side for the upside target of 560, 570 levels.
Okay, just want to pull up Godrej Properties. Let's just see what that stock is doing in the session today. It's now at 735, so do watch out for that one. Actually, a couple of percentage points lower in the session today. Not the best of afternoons for that one. Okay, the one which is doing well though is Balkrishna Industries, up about 6% post the numbers. Remember in the morning we said how Citi and Nomura's price target substantially higher. The stock is now trading in the highest point of the day. Dharmesh, any thoughts here? Tire companies by and large haven't been able to do very well. This one has corrected quite a bit, seeing some buying today.
Yeah, I think some sort of a portfolio allocation is happening out there, but still I have my fingers crossed on Balkrishna Industries, because these are off-highway off-road highway tire makers, and they have a long gestation period, 3 to 4 months it takes, and the type of construction activity which will take a backseat now, it will become difficult for Balkrishna to maintain the run rate of volume growth going forward for at least next 6 to 9 months, and global economy is also in the slowdown. Why this company manages well is because China is not into this space. China likes cash crop kind of a tire making activity, be it passenger vehicles or two-wheelers or TBR, but they don't go off-road tire making. So that advantage is there, but rubber prices, anytime it firms up, the margin contraction will be much higher. So I don't think there is a case in point to buy Balkrishna Industries as of now. So there may be some trading spikes or some portfolio investment which is being done. So you have a price uptick going forward. But as an investment theme, it should be avoided. Rather than, I think JK Tire should be looked into, which is more into replacement tire segment, and the type of environment which the government of India has created by imposing anti-dumping duty in other Chinese tire makers, and this company has already completed its capacity expansion. So it benefits a lot. It manufactures tires which the cost of which is similar to that of Chinese companies post this anti-dumping duty is there. So volume traction would be there. So that looks to me a good buy. The valuation multiples are very cheap. It's trading at around 5 times FY21 earnings estimate. So there's a lot of cushion out there. So I would recommend JK Tires to be bought rather than Balkrishna Industries.
Okay. Hemen, one Godrej stock which has worked well for you is your call at the start of the show, GCPL. What's the update here? Should people book profits?
I think so, Neeraj. It was a call at 688. We moved 15 rupees in 1 hour. I have a feeling that we're giving an upward key reversal on higher volume. It looks like going to 720, but basically it was a very short-term call, and if you're making 15 rupees in 1 hour, I'm more than happy. I think one should book out.
Okay, I want to talk about Mindtree because it's one of those stocks from the mid-cap space which is advancing in today's day of trade. That's up as much as 3.5%. At 921, of course, it may expect to see some volatility as and when we get more news of, VG Siddharth stake sell, which should be coming through anytime in the upcoming few weeks or months. That said, Sumeet, how are you viewing Mindtree with respect to the technicals?
Mindtree, it looks like that the stock is headed higher. In last couple of days, we have seen a consolidation in the counter, and it has given the breakout of this consolidation range. Now it seems that from here on, we can see a move till 950, 960 levels. One can initiate long positions at the current market price. Downside, the stock has support at around 890, 900 levels. So that should be the stop loss for long positions. And one can initiate fresh longs for the targets of 950 and 960 levels.
Another large cap which is doing well right now is Tata Steel. Dharmesh, come in on the metals pack, but perhaps let's just stick to the ferrous side of things. We have seen a reasonably good quarter for Tata Steel, but on the flip side, we're still seeing a lot of volatility in prices for JSW Steel and JSPL alike. How do you stand in this particular sub-segment of the metal sector?
As far as steel is concerned, last quarter was good on the volume of take, even the prices were firm. But if you look at the month of January, the volumes are already down 9% on the country basis. So that impact will be felt in Q4. And the demand for steel is going to slow down going forward, because with the type of fiscal deficit we are setting in, and election dates anytime it will be announced. So government spending will definitely go down. So what was driving steel was just the government influence spending which was driving them up. There was no other volume of take happening from any other count rather than the infra thing. So Tata Steel has its own set of problems going forward. Europe is still a very good concern. Their acquisition of ThyssenKrupp Germany can be a concern going forward. I think it's just a trading bounce back which you are seeing in Tata Steel. JSW Steel was expensive, so the correction is taken, and the volatility in the stock price may continue for some time to come, be it Jindal Steel, JSW Steel or Steel Authority. Even that posted a very good set of numbers, but again you see where the prices are headed. There was a good deep correction after the numbers were announced. So market is always forward looking, and the forward as of now, I mean, doesn't look very bright for any steel companies and for metals per se. At large, I think they are just trading blips which will happen. None of them looks to be a good investment bet at the present scenario.
Okay, Dharmesh, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Hemen, Sumeet, stay on. We'll take in final thoughts from you. But let's start wrapping up the markets. And we haven't succumbed too much. We are actually doing better than what we were at a point of time in the day, but still 0.5% lower on a day when the world markets and the European markets at least seem to be doing or were trading marginally in the green. The mid caps and the small caps, though, have been beaten down yet again. About 2% for the small cap space, 1.6% for the mid cap space. So that's ugly news. Agam will bring those to you. Let me try and talk about the large caps, which have done relatively better, I might say. So let's look at the specific stocks. Tata Steel up about a couple of percentage points. Not too many gainers, I might add. Tata Motors in the green today, so not bad going there. IT's found some gains, so the likes of TCS, HCL Tech doing okay. And amongst heavyweights, I think the HDFC twins haven't succumbed to too much of selling pressure, which is actually a good sign. Look at the losers though. Reddy's 5.5%, M&M 4.5%, ONGC 4%, Hindalco, Ultratech, Gale. The only heavyweight which has had some serious cuts is Reliance Industries, down about a couple of percentage points. Otherwise, the market today, the big movers have been lightweights, and which is why it's not a really 1% gash or a flat trade. It's lying somewhere in between with a 0.5% cut. But Agam, no such luck for the broader end of the spectrum. Lots of heavy cuts.
Yeah, absolutely. You know, Neeraj, last week I remember there was some hope when it comes to the advance decline ratio, but it certainly has taken a turn for the worse once again. And this time around, when it comes to the Nifty 500, we have just one gainer against 4 losers. But I am still going to start with some of the gainers in today's day of trade. So let's address Sun TV right at the top. And that is likely to end the day with gains of as much as 10% and perhaps some respite for shareholders of this very volatile stock. Let's move on and talk about Dilip Buildcon as well. Well, coming out with steady earnings, and as the management has suggested, well, they're still to realize a lot of the orders coming through. So, well, some positive cues coming in there as well. Balkrishna Industries, among many others, is something that the dealing rooms are also recommending at this point in time, up 6% at 105. We have some gains in Jindal Stainless too, and that stands out in trade. So there you have it, 11% coming in on the back of, well, several other factors playing in favor of it. But Apollo Tyres, on the other hand, is in focus, and this time towards the losing end. It has actually, well, recovered from days. Actually, it hasn't. It is currently trading at days lows and moving in contrast to Balkrishna Industries. We also have Thyrocare Technologies, which is the other one, and that's down as much as 10.3%. PC Jeweler is under pressure. Well, this one is, of course, we all know, as considerable, pressure coming on account of governance issues. Graphite is the other one, which is also down and out. It is down, and in fact, locked in a lower circuit of 10%. And KRBL is the other stock, is the one which is down as much as 10%. My intention was to pull out Apollo Hospitals and not Apollo Tyres, so maybe we can put the spotlight on that a little later on. But on the whole, when it comes to your markets at this point in time, let's pull up your Nifty and the Sensex on an intraday basis, and of course we are seeing weakness there, but it is the broader markets essentially which is taking quite a hit. Of course, that's your intraday movement of the Nifty. Well, it's been largely range bound, not too much to speak for. But let's also take a look at the contributors then, and what is it that's bear down on the index. And it is largely, well, okay, so Reliance Industries, M&M, State Bank of India, ICICI Bank, and of course that's a 77-point drop, so about 39 points, which is coming from others too.
Yeah, no big heavyweights. That's the point that I think both me and Agam were trying to make. No big heavyweights, save for Reliance and HDFC Bank. The volume should come up on your screen, and let's see if it's a high volume day or otherwise. Well, that's actually a low volume day, both on the F&O side and the cash market side, way lower than what we've been used to for the past few days. The average is about 30 on the NSE cash, northwards of 5 lakhs for the F&O. So this is lower volume certainly in the session today. And the market breadth has been abysmal, I'm guessing.
Yes, and the market breadth, so most certainly. I was really curious to see, actually it's, okay, so it's about 4 gainers for, well, nearly 12, losers, and of course that's how it's been throughout the course of the session, and it could be a case, a worrying sign. That's also possibly the reason why the benchmarks themselves have seen a little bit of pressure coming through. Well, on that note, I'm going to take our closing calls from our experts and what they think. So, Sumeet, starting off with you. Well, the Nifty is now closed below 10,900. Where do you stand here, and what would you do?
Well, yeah, same view. As I said earlier also, that there is a possibility that we might see a fall of around 100 to 150 points from present levels. So if we see any such correction, then at lower levels, one can initiate long positions in Nifty. Downside, the index has supported around 10,700 or 10,750 levels. At the same time, a closing above 10,900 will take index to 11,000 and then finally to 11,200, 300 levels in the next couple of weeks. So if we see a correction of 100 to 150 points from present levels, then that should be used as a buying opportunity. Overall, Nifty looks good to me for next 1 month to 2 months time horizon.
Okay, Hemen, how about you?
I think it would be prudent to go specific. Like I mentioned, I'm not bearish on the Nifty, but maybe it takes some more time to consolidate. The bright part of the VIX is below 16, which I think is a small positive. The Bank Nifty is threatening to participate. So, frankly speaking, status quo hasn't changed much, Agam. I think don't have a very clear view on the Nifty and Bank Nifty, but stocks are all over the place.
Okay, Hemen, as well as well, thanks so much for joining in, and Sumeet Bagadia, thank you so much for joining in as well. With that, we wrap up this edition of Countdown. Thank you so much from Agam and me and the team that put this show together. Up next is the Market Wrap with Agam. Stay tuned for that.